in Malaysian taxation and past indirect tax course conducted by Royal Malaysia Custom Department. A chartered accountant by profession since 2001. Conducted a few entrepreneurship courses which benefit the surrounding community at large since 2009 with external grant. Well, for the next agenda is presentation session. For the first turn will be given by the first presenter. Please welcome Mr. Abdul Rashid bin Sintamada. Hello, Mr. Abdul Rashid. How are you?
Alhamdulillah. How are you, Sheikh Arun Kusuma?
Yes, I'm fine, Mr. Okay, Mr. Abdul, you can start the presentation and the time is yours.
Okay, thank you. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatan min lisani yafqahu qawli. Assalamualaikum warahmatullahi wabarakatuh, and good morning to Pak Bani Al-Kausar, Sheikh Arun Kusuma, our moderator for this session, this morning session, and also all the participants from UNE, UIR, and also some other campuses surrounding us. So the topic which was given to me today is on business income tax in Malaysia. I will be closely presenting this one based on the PowerPoint presentation which was shared with all the participants. It will take roughly about 1.5 hours for me to present this one, as well as question and answer session, whether at the end of the session. So without further ado, let me begin the presentation on business income tax in Malaysia. Okay, disclaimer first. This presentation is given on academic basis only as a general guideline on taxation. It does not contain any final advice or complete information pertaining to a particular topic and should not be used as a legal reference. Neither the presenter nor the institution is responsible for any losses incurred by the user from this information given. So I shall now proceed with this one. And the learning objective, or the objective of our meeting today, is the first one is introduction to Malaysian income tax. Number 2, resident status of an individual, how we determine whether an individual is a resident or non-resident for tax purposes in Malaysia. Then we will talk about business income. The business which will be concentrated or focused in this presentation will be sole proprietor business. We in Malaysia, we have 4 or 5 models of business. For example, sole proprietor business, we have partnership business, companies, either private limited companies or public limited companies, as well as the latest one, limited liability partnership. But then the focus on today's presentation basically will be on sole proprietor business. Even though in my presentation, I will also touch a bit on other models of business which is in existence in Malaysia. Then the next one will be the responsibilities of employers. When you do a business, you become the employer. What is your responsibility according to income tax law in Malaysia? And finally, we will conclude what we have done for about 1.5 hours. Now, taxation, this is an introduction. This is the subject which I have been teaching in UITM or ITM Perlis since I think 2000. It is about 20 years I'm teaching this paper. This is an introduction paper for students who is doing diploma in accounting or diploma in accounting information system. So first, as an introduction, income tax, prior to 1957, we have income tax ordinance. Ordinance means any law which was enacted before Merdeka in 1957. This ordinance was used with effective from 1st January 1948 and was introduced into the Federation of Malaya. Whereas since 1968, we have an act called Income Tax Act 1967 or Act number 53, which was effective from 1st January 1968. Since then, we have been using this act, but every year there will be some modification or some addition to the act which will reflect the current development in taxation in Malaysia. Now, if you go to Income Tax Act 1967, the act basically have 100, more or less about 156 section and also about 14 schedules. So when we start, when I wanted to start teaching this one, the taxation, it was a big problem for me because not all of the section which I have to remember, I have to learn a bit by a bit. And now I think most of the section is well worth with me. Now we go to section number 3. This is the most important section with regard to taxation in Malaysia. So the section sounds as follows: subject to and in accordance with this act, a tax to be known as income tax shall be charged for each year of assessment upon income of any person accruing in or derived from Malaysia or received in Malaysia from outside Malaysia. So I have already highlighted here. The first thing in this act or in this section is a tax. So I will briefly explain to all the participants or my students from UNE and also UIR plus any other students who is following this presentation now. If we see the second line of the section says that a tax to be known as income tax shall be charged for each year of assessment, then upon income of any person accruing in or derived from Malaysia. So what is the meaning of tax? Taxation or tax, according to Oxford Concise Dictionaries, says that a compulsory contribution to state revenue levied by government on personal income and also business profits or added to the cost of some goods and services and transaction. And this is an extract from Oxford Concise Dictionary. Now, if you see here, we have compulsory contribution. It is compulsory. There's only two things which a person cannot avoid. Number one is death. Number two is tax. Wherever you are, you have to pay tax. So the first thing is personal income tax. Means if you are receiving any income or if you receive any income, the income will be taxed. And also from business. If you receive business income, that one also will be taxed. Or we also add this tax into goods and services and also transaction conducted by a business. So basically, this is the definition of taxation. So I believe that even in your country, you will have more or less the same definition about taxation, anything taken for the purpose of government. Now the next one, once we have known what is the meaning of tax, now we shall go to what is income. So there is no definition of income in the act, but then the act, Income Tax Act 1967, do classify this as income according to Section 4 ITA. ITA means Income Tax Act 1967. Number one, according to Section 4A, gains or profit from a business for whatever period. You conduct the business for whatever period, either accounting period coincide with your calendar period or a different accounting period, that one will be taxable. Our main focus today will be taxation on business. So if you are not doing business, then the income will be taxed under Section 4B. If you are employed, let's say after graduating with a diploma in accounting or bachelor in accounting, you can also seek employment from any industries, any companies. If you are employed, then that one, the employment income will be taxed according to Section 4B. So 4A is about business, 4B is income from your employment. And sometimes the individual taxpayer may also have income from Section 4C. Section 4C basically talks about dividends. Dividends means profit distributed by companies to the shareholders. Or interest. If you have a lot of money, you keep it in banks or financial institutions, then you will be receiving interest. The interest also will be taxed, and the respective section will be Section 4C. Or discount. Discount refers to if you discounted the bills of receivable or bills payable, if you get any commission, that one also falls under Section 4C. The next classification of income according to Income Tax Act 1967 refers to rental income. What is the meaning of rental? Let's say the taxpayer got movable or immovable property. Movable properties such as motor vehicle, machines, lorries, and so on. If you rent it to others, the rental income you receive will be taxable under Section 4D. Or if you have immovable properties such as land, buildings, and so on, so the income also will be considered as rental income, which will be taxed according to Section 4D. This is rental. Royalties. What is the meaning of royalty? Royalty means you produce something. You write a book, you become a singer, you become an artist, you act in any films and so on. If you receive royalty, that royalty also will be taxed under Section 4D. Then the next one will be pension income. What is the meaning of pension? An individual who ceased to hold office or retire from employment, he will be receiving pension income. The pension income will be taxed according to Section 4E, or annuities or other periodical payments. Other periodical payments means any income which you receive periodically, every month, every 3 months. So once you receive that income, even though that is not your business income or employment income or dividend, interest, rental, but that one will be taxable under Section 4E. Let's say your income which you receive does not fall under any of the foregoing paragraphs, such as Section 4A, 4B, 4C, 4D, 4E, then we have another section which we call Section 4F, other gains, which does not fall under any of the foregoing sections. So after 4F, we have another section, we call it Section 4, capital A, special classes of income. If you give consultation to any companies or multinational companies, that income will be taxable under Section 4A. Now, if you refer to the section which I have mentioned to you earlier, Section 3, a tax to be known as income tax. So I have now so far given you what is the definition of income, what is the definition of tax. So a person who got income will be taxed in Malaysia, provided that the income is revenue in nature. Revenue means an income which you receive regularly, repeatedly, will be taxed. Whereas capital received or capital income like any profits you make from disposing your investment, most probably that one will not be taxable. So that is what we call capital receipt. So revenue receipt will be taxable. And the agency which is responsible to collect tax in Malaysia is Inland Revenue Board, or in Bahasa Malaysia, we call it Lembaga Hasil Dalam Negeri Malaysia. So two things. Now from section 3, if you go to section 3, if you refer to section 3, subject to this act, a tax. I have already given the definition of tax and also the definition of income. How are we going to tax an individual? Based on year of assessment. Later on, I will be talking about year of assessment. What is the meaning of year of assessment? Am I going too fast, Pak Bani?
Okay, it's okay. It's okay too.
Thank you, thank you. So taxes in Malaysia will be divided into two types of taxes. Number one, we call it direct tax. Number two, indirect tax. And there are two agencies which is responsible to collect direct tax as well as indirect tax. And the two agencies are placed under Ministry of Finance, MOF. The first one is direct tax. When we talk about direct tax, means any taxes levied directly to the taxpayer, and it must be paid by the taxpayer directly to the recipient authority, which is Lembaga Hasil Dalam Negeri, or IRB. This subject is mainly related to Inland Revenue Board or Lembaga Hasil Dalam Negeri. Example of taxes which will be under the jurisdiction of Inland Revenue Board or Lembaga Hasil Dalam Negeri is income tax. What is the meaning of income tax? If you have income, you will be taxed. If you have no income, you won't be taxed. You receive little income, you will be taxed little. If you receive a lot of income, you will be taxed a lot based on your income. That's why income tax, if we try to categorize income tax, we will call it progressive tax. What is the meaning of progressive tax? The tax rate will increase as your income increases. Number two, taxes which is under the jurisdiction of direct Inland Revenue Board is RPGT. RPGT means real property gain tax. Real property gain tax means in Bahasa Malaysia, we call it cukai keuntungan hartanah. You have a land, you have properties. After sometimes, if you dispose the land, dispose the property, and you make a profit, the profit will be taxed based on certain percentage, which is about 0 to, if I'm not mistaken, 15 or 20%. After 5 years, maybe 5% only. Then we have also stamp duty. Stamp duty is based on Stamp Duty Act 1949. This one basically, if you do any legal documents, like if you want to make any agreements, for example, students from UITM, if they want to get loans from Perbadan Tabung Pendidikan Tinggi Negara, they will have to sign an agreement. The agreement must be stamped by Lembaga Hasil Dalam Negeri. So they have to put on the document 10 ringgit. We call it revenue stamp or revenue duties. And also petroleum income tax. This is mainly for petroleum income. So the next tax will be indirect tax. Indirect tax means taxes which will be imposed to any individuals or any persons who buy goods and services in Malaysia, and the person will be paying to the business organization. The business organization will then remit the tax to Customs Department. Okay, so tax will be paid by the individual person, but then via third party. Third party means you will pay to the business will remit to Royal Malaysian Customs Department. Examples of indirect tax will be as follows: sales tax, service tax. Now we have SST, sales and service tax. Prior to this, we have GST, goods and service tax, import duties, export duties, excise duties are all under the jurisdiction of Royal Malaysian Customs Department. So we have two agencies responsible to collect taxes in Malaysia. Now, if we look at our Malaysian budget, budget means estimation of revenue and expenses for prospecting years. Revenue mainly comes from direct tax and also indirect tax, as well as non-tax revenue. So this is the money which will be spent by the government for the development of Malaysia. So this is indirect tax. So I will be concentrating more on direct tax. So Inland Revenue Board. So the organization of Inland Revenue Board, you see, individual will be paying tax. The tax which is being paid by individual, we call it direct tax. Then the direct tax will be paid directly by the respective individual who got income to lembaga hasil dalam negeri. Whereas when you spend your money on goods and services, the business enterprise will collect the taxes from you, and the money and the tax will be remitted to Malaysian or Royal Malaysian Customs Department. Okay, Pak Bane?
Ya, Pak Rashid.
Boleh, ya?
Ya, boleh lanjut.
Oke. Bagaimana dengan pelajar-pelajar di sana, Pak Bane? Yes. Oke. Ada persamaan? Is there any similarities between perpajakan in Indonesia and also percukaian in Malaysia, Pak Bane?
Ya, pardon?
Ada. Okay, thank you. So objective of taxation. Why do we have to collect taxes? Number one is to provide business-friendly environment so that our counterpart from Indonesia, Pak Bane, can open up your business in Malaysia. We want to provide business-friendly environment to our investors. Number two, to redistribute national income. To redistribute national income through taxes. We collect tax, and then some of the taxes will be used to give assistance to vulnerable group, which in Malaysia we call B40, M40, and also T20. B40 are lower income group people, so that the government can give some form of assistance for them to maintain their standard or living standard. Number three is to raise revenue. Taxes will be the main revenue for the government to finance national expenditure. According to our budget, national expenditure can be divided into two types. Number one, we call it development expenditure. Number two, we call it operating expenditure. Development expenditure is expenditure on building hospitals, building schools, building universities, and also capital projects in Malaysia. We call it capital expenditure, or we call it development expenditure. And we also have operating expenditure. Operating expenditure which will be given to various departments for them to pay salaries of their employees and so on. So number three, the objective of taxation is to raise revenue. Number four, the objective of taxation is to ensure that taxes are collected effectively at a minimum cost. At a minimum cost. In Malaysia, about 10 or 15 years back, we use official assessment system. Official assessment system is a system whereby the tax department will be computing taxes for the individual taxpayer. We have to send all the information to the tax department. They will be computing and inform the taxpayer. So the taxpayer must pay tax. Now from 2001, we have already introduced self-assessment system, or in Bahasa we call it sistem taksiran sendiri. Sistem taksiran sendiri or self-assessment system is a system whereby the taxpayer must compute his own income, compute his tax, then remit the tax to Inland Revenue Board, either electronically or manual. Number 5, the objective of taxation is to contain unemployment, to overcome unemployment, and also to maintain economic development through prudent fiscal policy. Fiscal policy means dasar belanjawan ataupun dasar fiskal, whereby the government will try to adjust the revenue which was received for a particular year and also expenses. So most generally, for the past few years, we have a deficit budget. Deficit means the amount of expenditure exceeded the amount of revenue. And number 6, to attract foreign direct investment. How are we going to attract foreign direct investment through taxation? Through prudent tax rate. At one time, corporate tax rate was about 30%. Now it is only 24%, which is very much lower. And also for small businesses, for the first 500,000 threshold of income, we charge only 17%. So our corporate tax is between 17 to 24%. We have already gradually reduced the tax or corporate tax from about 30% now stood at about 24%. Number 7, the objective of tax. We have a lot of objectives by charging taxes to the individuals or business. But then these are some of the major objectives. To enhance well-being and quality of life. How tax can be used as an instrument to enhance well-being and quality of life. For example, now if you don't want your people or if you don't want them to smoke, so how can tax help in reducing the smokers? We tax the cigarette, or sin tax we call it. So the cigarette will cost more. There is a possibility people will reduce the consumption of cigarette. You reduce the consumption of cigarette, your life will be enhanced, or well-being will be enhanced. So this is about a few objectives of taxation. Okay, we go to sources of revenue law. Now, when we talk about taxation in Malaysia, basically we will refer to Income Tax Act 1967, which I have mentioned earlier, which have more or less about 156 sections plus 14 schedules. On top of that, we also have Real Property Gain Tax, Stamp Act, Lobata, Labuan, Business, Labuan for Labuan Tax Haven, 1990, and also public rulings, which will be issued by Lembaga Hasil Dalam Negeri. We have a lot of public rulings which will explain how a ruling or a section in income tax will be applied, and also others. Others means mainly we refer to tax cases and also recent development in taxation area. And this is the act. But then the act which I am showing now was bought in 2015. It's already 7 years back. Every year when we present the budget, we will be getting a budget book which will contain latest development to Income Tax Act 1967. Now, scope and how are we going to charge taxes in Malaysia? So we have 3 scopes According to Income Tax Act, we have three scopes of charge. Number one is derived and remittance basis. The scope which is being used in Malaysia is number one, derived and remittance basis, which means any income you derive from Malaysia will be taxable. And some income which you remitted into Malaysia also will be taxable. We have adopted this one since 1974. The other two charges which we will be using is territorial basis. Territorial basis refers to if you receive income in particular territory, it will be taxable only in that particular territory. We don't use that. World income scope, we also don't use world income scope unless for certain types of business. For example, sea and air transport industries, banking industries, and also insurance industries. Now we go to the next one. This statement also you can find in section 3, year of assessment. What is the meaning of year of assessment? Year of assessment refers to a calendar year which comprising 12 months from January to December. January to December. 1st January to 31st December, we call it basis year, whereas year of assessment is 1st January to 31st December 2021. Now, prior to 1999, we used preceding year basis. What is the meaning of preceding year basis? Preceding year basis means if you earn your income in 1998, you will be taxed in the year of assessment 1999, which means when you pension or cease to hold office in one particular year, after you cease to hold office, the next year you will have to pay tax for the previous year. But as from 2000, we have already started with current year basis. What is the meaning of current year basis? You earn your income this year, and in the same year, you will be taxed. So we call it current year basis. And from 2000, we have already started with current year basis, which means now 2021, we still use current year basis, which means you earn income this year, you pay tax this year. Okay, shall I proceed? Now we go to the next one. Resident status. Resident status is only important for tax purposes. This one does not depend on your nationality or citizenship. So how to determine whether an individual is a resident or non-resident? We will refer to Section 7 of Income Tax Act, or you can also refer to Public Ruling number 11/2017. This public ruling is to give explanation on how Section 7 will be dealt with. So how are we going to determine whether an individual is a resident or non-resident? We will have to refer to the physical presence of an individual in Malaysia. So physically, if you are in Malaysia for 182 days, the other day I spoke to Pak Bani, more or less the same also. But in Malaysia, you have to be in Malaysia physically for 182 days. Okay. Now we go to one or two sections of Section 7. So the importance, why is it important whether a person or an individual is a resident or non-resident? The scope of charge. Number 2, income tax rate. A person who is deemed to be a resident for tax purposes will be taxed from 0 rate to maximum 30%. So if you are a resident, you will pay, eventually you will pay less tax as compared to if you are not a resident. A non-resident will be taxed about 30% from your income, whereas a resident, we will tax from 0 to 30%. Later on, I will tell you the income band, which will be the lowest and also the highest. And a resident also will be given relief. Relief means income which will be exempted from tax. If you are a resident according to any of the section from section 71A, 71B, 71C, or 71D, you will enjoy 23 types of reliefs. Reliefs will reduce your taxable income. If your taxable income is reduced, then tax payment will be reduced. And also rebate. What is the meaning of rebate? Rebate means after calculating your tax, if your taxable income is 35,000 and below, 35,000 and below, you will be given individual rebate according to section 6A, which is about 400 ringgit. So we have calculated your tax, 400 will be deducted from your tax payment. Now we go to how to determine whether an individual is a resident or non-resident. For this purpose, I will use only section 71A, the first section. If you cannot become a resident according to section 71A, then we can go to 71B, 71C, and also 71D. But I will explain only 71A. Now, 71A sounds as follows. The person, he is in Malaysia in the basis year. See, basis year. Basis year means any basis year. That's what I have already given you the explanation. What is the meaning of basis year? 12 months period. You are in Malaysia for a period or periods amounting 182 days or more. You are in Malaysia for 182 days. So how to determine whether an individual is in Malaysia for 182 days or more? We refer to example number 1. Let's say A, an individual was in Malaysia from 1st January 2020 to 30th June 2020. Now, if you calculate from January to 30th June 2020, you will get exactly 182 days. How? January, we have 31 days. February, we have 29 days. March, 31 days. April, 30 days. May, 31 days. June, 30 days. If you add all this together, you will get 182 days. So you are a resident in Malaysia for tax purpose according to section 71A. Now, if I were to ask one of the students from UNE or UIR, let's say an individual is in Malaysia from 1st January 2021 to 30th June 2021. Can you please calculate from January 2021 to 30th June 2021, how many days, and determine whether this individual is a resident or non-resident? Because we use the same time, same period, 1st January 2020 to 30th June 2020, we have already calculated, we got 182 days. Now, if I were to ask you in 2021, X was in Malaysia from 1st January 2021 to 30th June 2021, is he a resident? I give you 2 minutes. Anyone want to answer? Please answer. Or else I give the answer. Any takers for the question? Throughout the presentation, I will ask 1 or 2 questions like this. See whether you can calculate or you can understand or not. Okay. For 2021, if you calculate the number of days, this is the meaning of physical presence in Malaysia. In 2021, if X was in Malaysia for the same period, 1st January 2021 to 30th June 2021, if you calculate the number of days, you will get 181 days. Even though same period, but 2021, you will get only 181 days. Why? Because 2021, in the month of February, you have only 28 days. 2020 is leap year. In February, you will have 29 days. Therefore, X will not become a resident for tax purposes. If he is not a resident, what will be the implication to him? He won't be enjoying any reliefs. He won't be enjoying any rebates, and the tax rate will be 30%. Okay, so this is how we calculate resident status for individual. Now, example 2. Because if you refer to section 7.1a, it sounds as follows. He is in Malaysia in the basis year for a period or periods. A period means one whole period, one consecutive period, which consists of at least 182 days. Whereas if he is in Malaysia for a multiple periods of 182 days also still can be regarded as a resident. So what is the meaning of multiple periods? For example, B was in Malaysia from 1st January 2020 to 29 February 2020. So if you calculate the number of days, 20 days. Then he left Malaysia. He left Malaysia, he's no more in Malaysia. He came back to Malaysia on 1st April 2020 and he stayed until 31 May 2020. So you will get 61 days. So this is second period. If you add the first period 60 days and also second period 61 days, you will get 121 days. Then the third period, he was in Malaysia from 1st October to 30th November, you will get another 61 days. If you add all the periods together, you will get 182 days also. So he will also become a resident for tax purpose. So this is basically introduction to Malaysian tax. This is the tax rate. You see, just now I did mention to you, if you are a resident, the tax rate will be 0 right up to 30%. So the lower your income, the lower will be your percentage of taxes which you have to pay. We start with 0%, 1%, 3%, 8%, 13%, and then you have 21%, 24%, 24.5%, 25%, 26%, 28%, and the maximum will be 30%. Okay? Now business. And now we go to what is the meaning of business according to Income Tax Act. Section 2 says as follows. Income or business income includes income which you derive from a profession, vocation, trade, and every manufacture, adventure, or concern in the nature of trade, but exclude employment, because employment income will be taxed under Section 4B. So what is the meaning of profession? Profession means an occupation requiring the exercise of purely intellectual or manual skill controlled by intellectual skill. Now you have a degree in accounting, or you have a degree in medical or legal degree, then by using your intellectual skill, you practice as an accountant, a doctor, a surgeon. We call it profession. Then we have vocation. What is the meaning of vocation? This is not vacation. Vacation means bercuti. Vocation means a strong impulse or inclination to follow a particular activity or career using your talent and capabilities. Sometimes you may don't have academic qualification, but you have talent and capabilities. You use your talent and capabilities to good effect in choosing and enjoying a career, like a motivator, a writer, a preacher, and so on. We call it vocation. But trade, we will discuss about it later. Now in Malaysia, and in particular as what I mentioned just now, we will be concentrating on sole proprietor business. Sole proprietor means business owned by one person, one single person or partnership. Companies, we won't talk in detail. So retail business means what? You are a hawker or you have night market stores, you are acting, singing, hosting any wedding planning, hosting wedding and so on. This is also business. Online business, or you conduct grocery stores, mini market, hardware stores, or if you are teaching in tuition classes, speakers, or other things which you receive commissions, or also direct selling. Writer, you write directly and you sell to your client, bloggers, YouTubers, agricultures, clinics will be taxes also, legal firms will be taxed also, accounting firm and other professional services. Okay, this is what is known, or we call it as business. Responsibilities of a business. If you are engaged in any of those business which I have mentioned above, the first thing as a taxpayer, you have to do the following task. Number one, you have to register as a taxpayer. With whom you have to register as a taxpayer? With Lembaga Hasil Dalam Negeri, as I mentioned before. Number two, when you have completed 1 year in your business, you have to submit return form. Return form on a date specified by Lembaga Hasil Dalam Negeri or IRB. This form will be issued by Lembaga Hasil Dalam Negeri according to Section 77(1). When we talk about taxation, we have to refer to sections. So far, until now, we have covered Section 3, Section 4, Section 7, Section 77.1, Section 4A, 4B, 4C, and so on. So there is a lot of sections. Maybe at the end of our session, I can ask 1 or 2 quiz questions to see whether our beloved participant can answer or not about Malaysian taxation in brief. Okay, the third responsibility of a taxpayer is to prepare financial statement and also other statement. What is the meaning of financial statement? When we talk about financial accounting, management accounting, or costing, the format will be more or less the same. But then when we talk about taxation will be different. Will be different a bit from one country to another country. So the taxes imposed in Malaysia will be slightly different from what is being applied or what is applicable in Indonesia or other countries. So the next one will be keep proper documents. Everything you have to keep. With regard to taxation, it is your mandatory requirements as a businessman to keep every document for 7 years. For what purpose? For audit purpose. So the tax department can conduct audit, either desk audit or personal audit. They come to your premises for the purpose of auditing within any 7 years. If you have defaulted, if you have cheated, then the 7 years is no more applicable. They can request you to provide any information for whatever period. You have to keep it. Now, as a businessman or sole proprietor business, which is small business, maybe most probably the businessman do not know about taxation. So what you have to do basically is to engage an accountant to prepare your financial statement, and also you take in a tax agent on part-time basis at least towards the end of your accounting period, either 31 December or 30th June, to prepare your tax statement to be submitted to tax department. Then comply with installment scheme. Installment scheme means if you are doing business, then you will have to pay tax only after 1 year. To avoid from you becoming a burden to pay tax in one large lump sum, so what you can do is you can write to Lembaga Hasil Dalam Negeri to pay in installment. every 2 months once, or every month, certain amount for tax purposes. So at the end of your accounting period, you don't have to pay a lot in one lump sum. So the next one will be inform IRB or LHDN, Lembaga Hasil Dalam Negeri, if you stop your business, close your business, or if you do partnership business, there is a changes in partnership. What is the meaning of changes in partnership? You admit a new partner, or an existing partner leave the partnership. So we call it change in partnership. You have to notify Lembaga Hasil Dalam Negeri. So this is some of the responsibilities. Of course, with regard to taxes, you have a lot more responsibilities. Okay. Now this is what I said, return form. If you refer to the responsibility number 2, submit return form. If you are doing a business in Malaysia, the return form will be look like follows. Excuse me. Borang B. Borang B is a special form for those who got business income. Business income means income from Section 4A. Section 4A, Income Tax Act 1967. So you have to submit this form before 30th June 2022 for the income which you receive, or for the profit which you receive for last year. Last year means 31st December. If your business got accounting period which coincide with calendar period, 1st January to 31st December, you have until 30th June, more or less about 1 more month to submit this form. Failing to submit this form to Lembaga Hasil Dalam Negeri by time, that is 30th June, is an offense, and the taxpayer or the businessman can be compounded. And you have to remember that if you do individual business or partnership, the individual business and partnership is not a taxable entity, but then the owner must pay tax on the business profit which he received from individual business, or the profit shared by the partnership business. So this one you have to send to tax department by 30th June. So according to section 112, 113, 114, 115, 116, and 117, there are a lot of this. This section talks about offenses. The first thing, you did not submit this form to tax department, it is already an offense. For whatever reason, you cannot say, I do not know. That's why under the responsibility transparency, I said, if you do not know about taxation, you have to engage a tax consultant. Ignorance of law is of no excuse. You have to engage an accountant or tax accountant to prepare this one. Number 2, you have already submitted this form, but you purposely or without intention make a mistake in this form. That one is also an offense. You can be compounded. And there are a lot of offenses. Another offense, the most big offense will be if you did not pay tax for whatever period, you cannot leave the country. That's why an individual who want to leave the country, you have to check with immigration department whether you are barred from leaving the country if you did not pay taxes. So these are some of the offenses. Now, trade. What is the meaning of trade? We have 10 things about to determine whether this is trade or not, but I'm not going to talk about this one in detail. It is sufficient for me to just glance through. Trade means, just now with the definition of business, profession, vocation, and trade. Trade means there are a few criteria to determine whether the things which you are doing is trade and will be taxable under Section 4A or not. So what indicate the activities? So we will refer to about 10 things. Subject matter. If you invest in stocks and the stock is being held for investment purposes, then there is a possibility that one can be considered as capital receipt. which won't be taxed. But if that one is normal trading stocks, you buy with the intention to resell, then that one will be considered as business income, which will be taxed under Section 4A. Length of ownership. Whether you own the things for a short period of time or longer period of time. Normally, if you engage in business, whenever you buy some things, immediately within certain weeks or certain months, you will sell it. But if you own the assets for about 5 years, 6 years, then you are not doing business. We can conclude generally, this is only a general statement. Formation of business. If you did not form business, you invest, you didn't form business, then we can assume that one as investment income. But if you form a business, a company or whatever it is, then we will tax it under business income. Frequency of transaction. What is the meaning of frequency of transaction? If you are dealing with trade or business, then the number of times you will be doing transaction will be more. If the transaction is isolated, only within 1 year, there is only one transaction, then the transaction can be considered as investment income. Alteration to properties. What is the meaning of alteration to properties? You buy properties, building and so on, you modify and keep it in saleable or marketable condition. Then that one can be considered as business income. But you buy that one, you just keep it for 10, 20 years. After 20 years, there is a need for you to sell the asset. Then that one can be considered as investment income. Circumstances leading to sales. Sometimes you are forced to sell. You go bankrupt, you have to sell your assets. Then that one can be considered as forced sales, not ordinary sales or ordinary trade. Motive or intention. What is the meaning of motive? Because in taxation, we have to look at the motive, why you buy certain assets. When you buy initially, if you have the intention to resell, to make a profit, then that one will fall under Section 4A, business income. Methods used to dispose, whether you do extensive advertisement or not, and also methods of financing, whether you take the loan to buy the assets and the assets will be financed or will be paid through the disposal of the loan, disposal of the assets. So this is the third thing which more or less we are not concerned with, because this is for companies. The one which I am concentrating here is only on personal business or sole proprietor business. Now, taxability. If your income is subject to tax or not will depend on the following criteria. Whether there is an existence or of a business source. The income must be revenue in nature. And the third one, most important thing, income must be derived from Malaysia. The business income must be derived from Malaysia. Then only it will be taxable in Malaysia. If you can prove otherwise, then the income will be deemed to be derived from elsewhere, not from Malaysia. Now we go to what can be considered as revenue for business purpose. What can be considered as revenue for business purpose? This one, you can refer to profit or loss statement, the normal profit or loss statement. What will be put in your profit and loss statement? You take your sales minus cost of goods sold minus expenses. So what constitute income from business for tax purposes? We have basically 5 things which can be considered as revenue for business purpose. Number 1, any money you receive or receivable. Receivable means you conduct the sales on credit basis from sales of goods or services. This is very clear. 99% of the income or revenue for a business will be from selling of goods and services. Number 2, insurance proceeds. You have stocks in your business, you take insurance policies to for your stocks. If let's say the stocks was damaged by fire or any other natural disaster, you get insurance proceeds. That one can be considered as revenue for business here. Number 3, drawing. Drawing means anything taken out from the business by the owner for personal purposes or for donation. You either use it for personal purpose or you use it for donation purposes. Then when you take the goods from the business, eventually the business will be losing profits. So that's why we have to add back the profits, at least the profits from the drawings for personal purposes as business income. Discount received and also recovery of bad debts. Recovery of bad debts means previously, bad debts means non-performing loan, more or less like non-performing loan. You sell the goods on credit to your customer, the customer don't want to pay back. So you can just write off from your accounts as bad debt. When you write off this one as bad debts in the current year, later on the following year, if the customer pay back, then that one can be considered as revenue for tax purposes. Okay, so far. Okay, I go to the next one. Now, when you get your revenue, what is profit? Actually, just now, as I mentioned to you, if you are doing sole proprietor business, the profits which you get from the business will be subject to taxable. Now, the question is, how are you going to calculate your profit? You take your revenue, as I mentioned earlier, you minus your expenses. The expenses must be business expenses and not the owner's private expenses. You can minus any expenses as long as the expenses falls under the following criteria. Number 1, revenue in nature. What is the meaning of revenue in nature? The expenses must be expenses to generate revenue in the business, not capital expenditure. If you buy fixed asset or non-current asset, you cannot minus in your profit or loss account. Or number 2, the criteria will be expenses of specific business source. The sources and expenses must be separately identified. Number 3, outgoings and expenses. Sometimes expenses you can clearly define or you can clearly see from your profit and loss account. If you look at your profit and loss account, of a normal profit and loss account, you will have a lot of expenses. For example, you have utility expenses, insurance expenses, salaries and wages, bad debts, you have depreciation for motor vehicle and so on, sundry expenses and so on. Now, for tax purposes, you have to scrutinize all the expenses individually, whether this is allowable for tax purposes or not. Of course, for accounting purpose, as long as you have the proof, you have already paid, you have the receipts, you can minus. But then for tax purposes, the tax department, if they audit you, they will request the proof that these expenses is solely spent for business purpose, or these expenses yield revenue to the business. If there is no connection between the expenses which you minus in your profit and loss account and your revenue, then that one will not be allowed to be deducted for tax purposes. Now, the next one will be motive incidental to business. The expenses must be for business. That's why if you don't agree with the tax, you appeal, you pay any cost to the lawyer for appealing. The cost of appeal of taxation will not be business income. Now, what is the meaning of the word wholly and exclusively incurred? Wholly and exclusively means the whole amount you spend and you put in your profit and loss account, and exclusively means the motive of the expenditure, which you have already deducted from your profit and loss account, must be related in the production of gross income. Let's say, for example, you rent a building, the building got 2 stories. The ground floor you use for your business. The first floor you use for private dwellings. And you pay 10,000 ringgit rental expenses. So in your profit and loss account, you minus 10,000. But for tax purposes, did you use both the whole building for business purpose? No, only the ground floor is used for business purpose. The top floor, the floor number 1, you use as your private dwellings. So that one you cannot minus. So for tax purposes, you can only minus 5,000, which means if you are allowed to minus only 5,000, the net profit for tax purposes will be increased by 5,000. Okay. The second one will be does not depend on accounting treatment. For example, depreciation is not an expenses which is allowed to be deducted for tax purposes because tax department will give you capital allowance or allowed modal. Later on, you can minus from your adjusted income. There are so many terminologies which I put in now. Later on, if you have any question, you can ask. If I can answer, I will answer. If not, we will see some other times where I can answer the questions later on. Dual purpose expenses or any expenses which incur obligation to pay. Provision for future expenses is not tax deductible. This expenses is going to happen next year. You cannot minus for tax purposes this year. Now, this is some of the expenses which is allowable for tax purposes. Number 1, wages and salaries. If you refer to any profit and loss account, a big percentage of the expenses will be going for wages and salaries. The wages and salaries which you are going to minus for tax purposes must be for the employees, any employees, but not the owner. If you pay salary to the owner, salary which is paid for the owner will not be accepted by tax department. So this is employee salary. Or if you contribute any of your employees' salary to EPF. EPF means Employee Provident Fund. This money can be taken out when the employee reaches the age of 55 or after pension. So that one also will be allowed, but there is certain limitation. We have about 19% which will be allowed. Number 3 will be business insurance. If you take insurance on your building, on your stock, that one also is allowed to be deducted. Rental on business premises. See, I told you just now, rental on business premises. If the premises is 2-story building, you occupy the first story for business, only the rental you pay on the first floor or the floor which is being used for business purpose will be allowed to be deducted for tax purposes. Interest on loan taken to finance your business. I will go into it later, Nanti. Utilities. Utilities means water bill, electricity bill, telephone bill, used for business, trade, bad debts. Anything to do, you sell your goods on credit basis. If the customer cannot pay back, then that one can be written off as your expenses for tax purposes. Again, there are certain limitations. That's why, as what I said to you just now, any expenses you want to minus for tax purposes, you must make sure that the expenses is meant for business, not for other reasons. Now we go to how to determine whether an expenses is for business purpose or non-business purpose. Okay. Now, for example, we have interest, rental, and repairs. This is a few expenses which you can put as expenses in profit and loss account. So if the interest on loan which is paid and the loan is used for producing income for the business, then you can minus. The loan to acquire assets or non-current asset to be used by the business, you can minus. But if you take the loan from bank, you use it to modify your private house, the interest which you pay cannot be deducted for tax purposes. So this is in detail. What is the meaning of the expenses must produce income, or income and expenses must be related? Rent expenses, I have already explained to you. Repairs and renewals. If there is any repairs expenses incurred for the business, then you can minus. Why? To bring the assets into efficient use. Let's say the business, in your business premise, the doorknob is broken. You have to repair. So that expenses can be deducted for tax purposes. Bad debts also can be deducted, but then the bad debts must be either specific provision or we call it trade bad debts. You can minus. But if you just provide the bad debts generally, that one cannot be deducted for tax purposes, because we do not know whether this bad debt is as a result of business transaction or other reasons. Let's say this, you give loan to your employees, loan to your parents, then they don't pay back. That one definitely you cannot assume as bad debts of the business. Unless you sell goods to your customer, the customer cannot pay back, then we can assume that one as trade bad debts. Employees' contribution to EPF also got limitation, cannot be more than 19% of the remuneration. What is the meaning of remuneration? Remuneration simply means the salary and also allowances paid to the employees. You take the whole amount, you take 19%. Accordingly, it must not exceed 19%. The next expenses, this is also specific expenses, equipment which is for disabled employees, or translation or publication of books in the national language. We take a book, we translate it into Bahasa Malaysia, and that expenses also can be deducted for tax purposes in business. Excuse me. Or the business contribute to the libraries, school libraries, university libraries, you can also minus according to section 34, 6H, 6G, or you can also minus from your business income later on, aggregate income of the business. Or if your business spend for social responsibility payment or tanggungjawab social corporate, this one also can be deducted from the profit and loss account for tax purposes. Childcare center, to encourage employer to build childcare center within the office premises. The revenue expenses incurred to manage the childcare center can be deducted, not the cost of building the childcare center, because that one will be capital expenditure. Section 34 also, you take in practical training student as intern, you pay allowance. This is also can be deducted. If you give scholarship to needy students means those who are from vulnerable group, you can also minus for tax purposes. There are a lot of expenses which is being given by the tax department for a business to be deducted from their gross income to arrive or derive adjusted or taxable income later on. Halal certification. If you apply for halal certificate from JAKIM or also standard certification from SIRIM or some other institution, the cost paid to get this halal certification is also allowed to be deducted. This is the criteria which will be used to either allow an expenses to be deducted or not deducted for tax purposes. We are not talking for accounting purposes. Accounting purposes, as long as if you have your receipts, proof, you can minus. So that accounting which you have already prepared for accounting purposes will be used to recalculate your profit for tax purposes. Now, what are the criteria used to allow or disallow the expenses? Number one, domestic or private expenses. Let's say you are running a business, private or sole proprietor business. If the expenses is for your private expenses, your own expenses, your family expenses, then you cannot minus for tax purposes. Or any expenses which is not wholly and exclusively incurred for producing income. So if the expenses, you cannot prove that the expenses yield revenue to the business, then you cannot minus. Or number three, the expenses is in relation to violation of any law in Malaysia. Let's say you use your business car to send goods to your customer. Let's say your company or your business is in Perlis, you want to send goods to your customer in Penang. So you have to use highway. So in the highway, the speed limit is only 110. Now you drive your car along the highway, you drive at 160. When you reach certain places, then you are compounded by the traffic police. You have to pay 300 ringgit for compound. Can you minus the 300 ringgit as your business expenses? No, because these expenses won't incur if you follow the rules. If you drive at 110 kilometers per hour, you won't be compounded. Because you drive at 160 kilometers per hour, you are compounded, and this is not business expenses because you violate the law. Drawing also will not be allowed. Payment to unapproved pension will not be deducted. Depreciation also won't be allowed. For tax purposes, we don't allow. Why? Because depreciation, we have a lot of methods to depreciate an asset or non-current asset. For example, you can use straight line method, declining, double declining method, reducing balance method, or some other methods. But for tax purposes, they will allow you to minus capital allowance. Actually, capital allowance is exactly the same as depreciation expenses in accounting, but the terminology is different and the method to calculate your capital allowance will be different and the rate will be prescribed or provided by tax department. Okay, now we go to the next one. Leave passage is also not allowed. Lease rental.
Excuse me, Mr. Abdul.
Yes.
I'm sorry, I want to remind you the time for presentation session is up. Can we change into another session?
Another session means
Question and answer session.
question and answer.
Yes.
So can you please give me about 5 minutes so that I can
Okay.
just.
Okay, Mr. Abdul.
Okay, thank you. So I just show the transparencies. This is non-allowable expenses. For example, you pay electricity, water, or children's school fees, purchases of private assets, car, house, or furniture for private use, initial expenses or preliminary expenses. This one is non-deductible also, unless you can prove this is to entertain your customers, your employees, you can minus. And we also have some expenses in order to encourage the business to take in handicapped worker or other types of expenses. For example, expenses to acquire recognized quality systems, remuneration paid to disabled worker. If your business take in disabled worker, the salary paid to disabled worker can be given double deduction, which means you pay 10,000 for the employee. For tax purposes, you can minus. This will act as an incentive for the business people to take in disabled employee to be employed within their organization. And this is what I said, capital allowances. So we will give capital allowances for our plant and machinery, industrial building, as well as agriculture. Next. Now, what are the duties of employers? Employers means the business. Register employer file number, submit employer return, inform IRB, new employee. If you are doing business in Malaysia, you take in a new employee, you have to inform Lembaga Hasil Dalam Negeri. Declare and issue income statement, update any changes to your particulars of your employees, and also keep the documents for 7 years. You have to keep any documents with regard to taxation for 7 years. These are the documents, some of the documents which you have to keep for 7 years for audit purpose by Lembaga Hasil Dalam Negeri. Bank statement, invoices, especially if you do business, invoices, sales invoices, purchase invoices, confirmation of sales and purchases via email or any other electronic means, any agreements must be kept. Digital business, never mind, we can give references. Okay, that's all. Thank you. I think within 5 minutes, huh? Okay, thank you. So I hand over to the moderator for the next session.
Okay, thank you, Mr. Abdul Rashid. Well, ladies and gentlemen, now we are come to the question and answer session. The question and answer session will take 30 minutes. Please use raise hand feature and don't forget to mention your name before you ask question. Well, would anyone like to ask any question?
Oke, silakan teman-teman jika ada yang ingin ditanyakan. Oke, untuk sesi Q&A di sini boleh ya, pertanyaannya disampaikan dalam bahasa Indonesia boleh, dalam bahasa Inggris juga boleh, atau kalau malu, pertanyaan bisa disampaikan di kolom chat nanti supaya bisa dibacakan oleh moderator Arum Kusuma. Silakan teman-teman.
Sepertinya sudah ada yang ingin bertanya nih. Silahkan untuk Dina Normalia bisa langsung saja bertanya.
Oke, makasih Arum. Excuse me, Mr. Abdul. I'm Dina Normalia from Airlangga University Tech Station. I want to ask a question. Everyone definitely doesn't like paying taxes. Is there any government policy to improve taxpayer compliance in Malaysia? Thank you.
Okay, among the steps taken to improve the tax compliance in Malaysia, previously we used official assessment system. Now from 2001, we have already introduced self-assessment system. When we introduced self-assessment system, the compliance rate among the taxpayers improved significantly as compared to prior to the introduction of self-assessment system. So we are in the process, I think, in the process of gradually improving the compliance rate. Now, because if you send anything wrongly, you will be in fault. Prior to this, you just send all the information to Inland Revenue Board. They will be calculating taxes based on the information you provide. Now, under self-assessment system, you yourself compute your own income, compute your own tax, and submit to tax department. Later on, they will have a lot of time to audit all the taxpayers. When they come for audit, as I mentioned earlier, you have to keep all the documents, any documents pertaining to taxation for 7 years. So you cannot say, oh, documents for last year I've already throw away. No, you have to keep it. Let's say you have intentionally defaulted in your submission of your tax return form. Then if you purposely defaulted, then the 7 years ruling is no more applicable. It can also go to more than 7 years. So did I answer your question?
Yes, Mr. Abdul. Thank you for the answer.
Welcome.
Okay, we are moved into another question. For Ilham Nupi Patarai, you can ask your question.
Oke, terima kasih. Excuse me, Mr. Abdul. Let me introduce myself. My name is M. Ilhan Nubi Patarai, but my friends call me Hans. I'm student at Airlangga University Tax Study Program. We know that during COVID-19 pandemics, many companies' revenues have decreased. Is there a government policy to provide income tax incentive during the pandemics in Malaysia?
Oh, okay. With regard to your questions, I would like to say that during the last 2 years, 2020, 2021, when COVID-19 pandemic, the government gave extension to the business to submit their tax return form, and also to individuals. Normally, the date for submission for individual tax return will be on 30th April. They extended it until 30th June, whereas for business, any types of business, for example, if you are conducting sole proprietor business or partnership business, if you have income and you have to submit your tax to tax department, your last date to submit your return form or Porang B, which I showed to you earlier, must be submitted before 30th June. But then during the pandemic, the government extended the period until August 31 August, the respective year of assessment. And also there is a possibility they also give some form of extension. Okay. Thank you.
Okay, thank you, Mr. Abdul.
Thank you. Welcome.
Baik, untuk teman-teman yang ingin bertanya untuk Mr. Abdul bisa langsung saja chat di kolom chat Zoom jika malu untuk mengungkapkan pertanyaannya secara langsung.
Itu di kolom chat sudah ada pertanyaan, Mbak Arum, coba dibacakan.
Okay, there is question from Akane Fainaila. Excuse me, sir. I'm Akane from Airlangga University. Is there any difference in rules between conventional and e-commerce corporate tax business in Malaysia?
Okay, with regard to that question, I would like to say we at the moment based on derived and remittent basis. As long as you have business, you have income derived in Malaysia, it will be subject to taxation in Malaysia. Okay, thank you.
Is it clear for Akane? Baik, teman-teman bisa bertanya menggunakan bahasa Indonesia juga loh jika merasa bahasa Inggrisnya masih belum pede atau bagaimana, bisa langsung aja chat di kolom chat Zoom dengan menggunakan bahasa Indonesia.
Okay, this is the same questions which I answered just now. Is there any difference in rules between conventional or e-commerce corporate tax in Malaysia? As what I said to you, if we can prove, if there is the element of derivation, if you derive the income from Malaysia, it will be subject to taxation. Derive the income in Malaysia. Okay, thank you.
Okay, thank you, Mr. Abdul. Well, ladies and gentlemen, the time for Q&A session is up. Maybe we can continue in another occasion. For all